Islamic mortgages are criticized for not being Islamic enough, and instead, many of the critics champion a different type of product called shared ownership. And one of the best examples of shared ownership is Pfida, which is a new company that is developing an innovative way of home finance that already has over 10,000 people on their waitlist. Clearly, Pfida has captured the hearts and minds of many. So in this video, I wanted to look under the hood and give my honest assessment on how Pfida stacks up against the rest. I'll explain exactly what they do, how they're different from other Islamic home financing products, what their users have to say about them, and whether they are a genuine and viable alternative. We have previously actually reviewed Pfida and met the founders a few years back, so I will take an opportunity to basically reflect on their progress since then. What has changed? What progress has been made? For those of you who are new to this channel, I'm Ibrahim, and since 2016 I've helped millions of Muslims with their personal finances and their investing. We run an investment firm called Curate Capital, written a best-selling book, and hold qualifications in Islamic law, investment management, and corporate law. Pfida, previously known as Primary Finance, does two main things. Number one, they offer home finance. And number two, they offer a savings product, which is actually how they get the money in to fund those homes in the first place. Think of it like this. They collect money from savers, use it to help people buy homes, and then those savers get a share of the rent from the buyers as the rents come in. And of course, Pfida take their cut. We'll get into the savings side a little bit later on, but first, let's talk about their home financing option and how it actually works. Before we dive into Pfida's model, here's a quick reminder of how a standard Islamic home purchase plan or an Islamic mortgage works. With this HPP, the kind that's offered by Gatehouse or Stride Up, it's not a loan. You're not borrowing money. Instead, you and the provider buy the property together. You put down a deposit, let's say 10% or 20%, and they will cover the rest. And then you slowly buy out their share while paying them rent on their portion. Here's the key difference with Pfida. With a normal HPP, you're locked into buying the provider's share back over time consistently. With Pfida, you don't have to. It's optional. Now, they do highly incentivize it. And by highly incentivized, I mean you would be a complete and utter moron if you didn't buy back every single month. And the idea is that if you hit their recommended payment every month, you get a chunky rental discount. So for example, if you're living in a house with 2,500 market rent, they might say, look, we will help you buy this house, but instead of paying 2,500 on it, we'll count 1,500 pounds of your payment to us as rent, and then we'll count 1,000 pounds of your payment towards the actual principal, the buying of the house. And so we'll basically let you buy at 2,500 outgoings and split between paying the house and the rent. But if you fall short of the 2,500 magic number that Pfida want you to hit, i.e. you don't meet their payment plan, then the rent discount goes away and you are back up to needing to pay 2,500 market rent. So in practice, all but the completely insane would buy back their share every single month, even if they're not tied in to do it technically. So more on this technicality in a second, but there's no doubt whatsoever in my mind that Pfida's product is Sharia compliant. They've been reviewed and certified by Sheikh Haytham al-Haddad and the Islamic Council of Europe, in addition to being signed off by their in-house scholar, Sheikh Salman Hassan, who is also one of the co-founders. But let's go back to this lack of compulsion, which Pfida says removes any element of debt. They call it a purer form of partnership, and in their view, a cleaner and more unambiguous halal alternative to HPPs. My personal view, as long-term viewers of this channel will know, is that I actually think Islamic mortgages are perfectly fine, and being locked into purchasing the house on a payment plan from the Islamic bank is not problematic, because there are two separate and distinct contracts, and one is for renting and the other is for buying the capital in the house. And I've shared a detailed view in an article I will link in the description below. I also think that Pfida basically achieves, through contractual terms and incentives as I've described, what an Islamic mortgage does legally, i.e. by highly incentivizing you to continue paying up on time on both the rent and the capital repayment, we basically end up in the same place. But in one example, on the Pfida side, we have the fig leaf of optionality. But putting aside my personal view for 1 second, what Pfida are saying is a very credible Islamic legal position in the market, and I know a number of people have that view and have very strong feelings in that direction as well. And I know that my perspective also has Islamic scholars who believe deeply and sincerely in that. And I actually know other scholars who say that you can go for conventional mortgages, and that includes some of my own teachers. And again, this is credible view in Islamic law. And the point of this video is not to necessarily unpack each of these three positions. It is to tell you that there are these three positions and that the Islamic mortgage side falls on one end of the spectrum and the Pfida approach falls on the other, and both have very respectable scholars behind it. And if you do fall on this end of the spectrum, then Pfida does tick a box, and it does give a complete peace of mind, because you know that no Islamic scholar is saying that what Pfida is doing is problematic in any way. And that peace of mind cannot be understated for many people. What I do really like about the Pfida model is their concept of rental holidays, where if someone is struggling, you can basically roll over those months on the financing amount itself. This is, of course, generally not an advisable thing, and you don't want to be in that position, because you will quickly rack up a fair bill just because of the rent that you owe will start racking up, and then it will compound over time as well. But the idea of it, the flexibility of it, the breathing room to be able to do that, I think is a fantastic innovation. The other thing that we'll talk about, which I think is brilliant, is Pfida's willingness to share in the loss in a downside scenario. This is, again, unheard of in the Islamic home financing market, and really deserves a doffing of the cap to them. And we'll talk a little bit about that later. Okay, so far so good. We've talked about the theory, but there are some challenges you need to know about before you start putting the offers into Rightmove and getting yourself some financing from Pfida. Challenge number one, Pfida are not regulated. Now, Pfida did try to get FCA authorization, but the FCA ultimately decided that their home finance model doesn't fall under their remit, because there isn't any lending or debt creation involved, and because they don't want to fall into the purview of the HPP model. So the regulatory world, Islamic mortgage is not seen as a conventional mortgage. It has its own definition. And Pfida basically described that they are not falling under the classic HPP model where people are locked in to buying out a house. And therefore the FCA said that we don't have a box for you to fit into. We don't have a HPP box. We don't have a direct lending box. And therefore you're just selling homes. You're a landlord. And that isn't regulated activity. So with that in mind, Pfida have continued being unregulated on the home financing side. But on the investment side, their savings product, that is a different story. And I have views on that, and we will share that later on in this video. From a Sharia perspective, of course, there's weirdly an appeal to the fact that Pfida's model is so different to the HPP model that they aren't able to get FCA authorization. From a consumer protection perspective, it means that you don't necessarily get the same safeguards, however, as you would with a regulated home purchase plan from a bank. With an FCA authorized product like the Gatehouse one or Al-Ahli or Stride Up or any of the others, you have a built-in protection if things go wrong. You also have the significant oversight and reporting that every FCA authorized firm needs to do, which massively improves the base standard of the products that firm offers. It also means that there's frankly far less room for hanky-panky, because you've actually got someone who's looking over you. You get the peace of mind that there's a policeman that is regularly going around knocking on doors, such as Pfida and others, and just making sure that nothing dodgy is happening. Right now, that policeman isn't going around to the Pfida house. It's going around to all of the other FCA authorized firms. The second issue is the wait list. It's currently around 5 years. And unless you invest in their scheme and jump the queue, even then, you're probably still looking at over a year at least. To date, they have only funded just over 100 homes. Compare that to Islamic banks who are funding thousands every year. And you can see why Pfida isn't going to transform the market overnight as we stand. And that means if you need a house this year and you've already done your saving, Pfida probably isn't going to be your answer. The third challenge is that Pfida's legal structure is untested. Because the thing with legal docs is they're basically ignored until things go wrong. And that is when they really matter, in court, for example, or in a dispute. And in Pfida's structure, our ownership, or the home buyer's ownership over the asset, appears to only be contractual rather than fully owned by you day one at land registry. That should be fine in theory. In Pfida's structure, where everyone is effectively in one large pool and certain people have home financing stake in a property and the rest of the property is owned by the savers in the pool, the ownership over the asset isn't isolated in the same way that it is in a typical Islamic mortgage or even a conventional mortgage. And the interest that you have, your residential home, appears to be only contractual rather than isolated like the others. And that should be fine in 99% of the cases. But when it comes to buying your main home, any legal uncertainty is not something you want hanging over you. And if this ever did get disputed, for example, God forbid you have a wind-up scenario, some company collapse, Pfida collapses, someone collapses, you are also relying on the completely accurate accounting standards and record keeping by Pfida. There isn't a fallback position that, look, this is all very isolated. You are actually going to be in a larger pool. Again, there's no reason to suggest that, Pfida isn't completely on top of all this, but it is one additional thing to keep your eye on. And it might be that I'm perhaps being too overly cautious here, but I'm just sharing my perspective. When I was going to buy a house, this was one of the key considerations I had in mind. I like to have legal certainty when it comes to my home ownership, because I really don't want to be experimenting with that. The fourth challenge is the stamp duty problem. This one is a bit technical, but it's worth understanding because it can be expensive. Here's the situation. With a HPP from an Islamic bank, the structure is set up with the blessing of the FCA and the HMRC that you only have to pay stamp duty once, like any conventional mortgage. With Pfida, it's different. The property is bought through a special purpose company that sits inside their investment structure, as I mentioned. And under UK rules, that means the first stamp duty is paid at the corporate rate. That corporate rate is more expensive than the normal residential rate you'd be paying if you were buying it directly. Then, when you finally buy Pfida's full share at the end of the agreement, that's treated as a second transaction, so you have to pay stamp duty again, this time at the residential rate, and then it finally comes into your possession. Pfida passes both of these charges on to you, so you're essentially paying over double the amount of stamp duty that you would through a HPP. Pfida will point out that they share in the downside if property prices fall, and if property prices go up, they gift you the full upside on your share, which, to be fair, is something that HPP providers also do, at least on the upside. They don't take a cut of your capital gain in that situation either. But to be fair to Pfida, they will say that actually HPP providers don't take the downside. So you are winning some stuff and you are losing others. So while Pfida's model is innovative and arguably purer in Shari'i terms, according to some, you do need to factor in this lack of regulation for now, the long wait before you can access it, and the higher transaction costs due to the double stamp duty. Pfida don't just do home finance, they also offer savings product, and the whole idea here is your saving helps fund other people buy home purchases. They've got two main options under their Grow Your Savings banner. Grow Your Savings Home. This is the main one for folks that want to move up the wait list. You put your money in, Pfida uses it to help customers buy houses, and in return, you get a small profit share, typically 1% from the rent that they collect, which, by the way, is significantly below the profit share offered by Islamic banks, which is around the 4% rate in the market. So what Pfida are doing here is effectively subsidizing the rental cost of these houses by giving savers on their wait list a smaller return. So if you're getting paid out 1% and Pfida is financing at 6, 7, 5%, whatever it's doing, there is this spread. So where is that going? It's going to other investors and it's going to Pfida. And so you're effectively subsidizing your own future financing. Grow Your Savings, GYS, GYS Plus, GYS Pro, it works in the exact same way. Your savings go towards a Pfida property funding, but this time you don't get access to the wait list, and in return you get more of a market competitive rate depending on how much you put in, ranging from 4.07% all the way to 4.7%. But here are the key things to know. Firstly, there isn't any FSCS protection, unlike an Islamic savings account with a bank. This isn't covered if things go wrong. So Pfida's product is not a bank savings product and should not be mistaken as such. In our view as well, as Pfida are now a scaling platform, this product, in my humble view, should be regulated. Now, I totally get that there is a natural grey area in financial regulations, and many early stage firms, including Monzo and Revolut and others, have had to push the boat out a little bit at the start. And that is where Pfida are sitting today. And allowances can be made for investment firms for a period of time to be in this grey zone. But it's been a few years now, and my personal view is that Pfida really should get regulated for their investment product, because it's now a relatively mature product which is handling tens of millions of pounds. And I understand that Pfida are now making efforts to cross that FCA authorization Rubicon. Regulation under the FCA also means things like mandatory audits and regular reporting, which massively increase trust in a brand. So it'll help them in the long term to actually scale. Alternatively, they could partner with a regulated firm and get that firm to offer a Pfida product for them. That adds a layer of verification too, because there's now a third party involved in actually dealing with the money. And if you're a family office or institution or an ultra high net worth, sophisticated investor, and you understand the risks and are happy to invest with them, in that case, there's no problem. Even if it is unregulated or regulated, for you, that doesn't really matter at all, because regulation is there typically to protect smaller, less sophisticated investors. Larger professional investors with experience who know what's going on, absolutely no issues whatsoever. The other thing with this savings product is you can't just pull your money out instantly. There is typically a 3-month notice period before you can get that money back. And if you think about where the liquidity is coming from, pretty much all of Pfida's products, the financings that they're giving, are going to be very long term. And so the way that you're able to get back your money is either through the rental returns that are coming into the pot, or by more savings coming into the pot to replace yours. So you should be going into it with a very open mind in terms of what's going on when it comes to a liquidity perspective. That's not necessarily a bad thing, is how many firms deal with their liquidity. It's just something to bear in mind. When it comes to their returns, their expected yearly profit is around 1% for their home product. So it's not really about high earnings, it's about supporting the model. And they do now have, as I mentioned, a higher yielding product which offers a 4% plus return. In terms of risk, it's backed by properties. It's not high risk at all. And the only risk really is that if all of the renters at the same time stop paying at once, then returns could dry up for a while. But the likelihood of that happening at the same time is incredibly low. So how does Pfida compare against other players like Gatehouse and StrideUp? The likes of Gatehouse and StrideUp all offer Islamic home purchase plans, but how does Pfida's model stack up to that? Here are the key differences. No debt obligations. With the HPP, you have to buy back the provider's share over time. With Pfida, that's optional. They still strongly incentivize it, as I've mentioned, through the chunky rental discounts. So in reality, most people still do end up buying back, just like with an Islamic bank. But from a fiqh perspective, according to some, this optionality is what makes it a bit purer from a Shari'i perspective and unambiguously halal for that community. But in my view, this is not a substantive difference in practice, and I'm not going to re-labor the point. The other point is that Pfida isn't regulated, so that's one of the key differences between them and Gatehouse, Al-Ahli, StrideUp, and all of the others. Loss sharing, as we've mentioned, is another genuine standout thing that Pfida are doing, which HPPs are definitely not doing. It's a bold and very customer-friendly approach by Pfida here that shows a real commitment to partnership. The only note of caution is, of course, it's still early days, so we'd like to see how it practically plays out, but I have no reason why it wouldn't actually play out, as Pfida have said. The other interesting thing is the equity buffer. I think this is fantastic. If you hit financial difficulties, Pfida lets you sell back some of your equity to cover your rent. No HPP provider offers that today, and it's the kind of safety net that makes a huge difference to families during tough times. And it does speak volumes, I think, to Pfida's willingness to innovate and be customer friendly and community centric. The flip side is that this generosity will potentially create a cash flow burden for Pfida. So if we were to see a recession, a credit crunch with lots of customers struggling at the same time, that could put real pressure on their ability to honor that scheme and run it smoothly. But I do think that the likelihood of all of these rental payments not coming in at the same time is very, very minimal. So all in all, really interesting feature. From a deposit perspective, Pfida's minimum is 20%. They do accept 15% on a case-by-case basis. However, Gatehouse can go as low as 5% and Stride up 10%. So that's something to bear in mind. From a price transparency perspective as well, Gatehouse and StrideUp are very clear on their fees and their rental costs, and they have to be, again, because they're authorized. Pfida's pricing feels a little bit more bespoke and a little bit less transparent, if I'm honest, even if their model is more dynamic, because they will say they are pegging to market rate rent, and therefore they can't really give you a price off the bat. But I would highly, highly encourage more transparency here by the Pfida team, because as they scale, they're just going to have to do this, in my humble view. And even if they say, look, it's about the market rate and we can't exactly explain that every house under the sun, I think it would be quite helpful for folks to see a worked example or two, just to kind of understand how they work out what that final cost is, because it would be a function of market rate rent, it would be a function of a discount that is applied to that, some kind of adjustments going on, and it would be brilliant to actually see from a homeowner's or home buyer's perspective how that works, because it allows you to start comparing between the different options. Of course, Pfida's waitlist is far longer. A bank can issue an offer pretty much immediately, and with Pfida, you are going to have to wait potentially for several years. When it comes to pricing, banks link to ultimately the base rate, and Pfida is using local property market rate rents, which can go up or down, and in many cases actually, and in some cases, it has actually gone down because the market rate rent has fallen, which I think is really cool and innovative again from Pfida's perspective. Then stamp duty is the other one. With HPPs, you get the dual relief, so you only have to pay stamp duty once. With Pfida's structure, you will have to pay twice. The other thing is, with Pfida's model, you can't use a lifetime ISA, so you can't use your savings in that to be able to purchase and fund your deposit and retain all of the government bonuses, and they are pretty healthy, right? You invest 4,000, you get 1,000 extra a month, which can add up to a fair amount of free money from the government. So that bonus, unfortunately, won't be eligible for this mortgage if you withdraw that from the LISA, but it would be from an Islamic mortgage or for a conventional mortgage. Okay, so this was HPPs compared to Pfida. How about other shared ownership alternatives? Well, Pfida's main competitor here is Wayhome, and I'm not going to go into a huge amount of detail about how the two of those contrast, primarily because Wayhome isn't necessarily issuing financing right now. But at a high level, the key differences are that Pfida will let you pick pretty much any suitable property, whereas Wayhome has a pre-approved list of properties, so there's less choice, but at the same time, there's pretty much no risk of rejection later on. The other key thing is that Wayhome caps you at 40% ownership, though I think they are working on unlocking that a little bit further, whereas of course Pfida allows you to buy up to 100%, which I think is a massive advantage. When it comes to shared ownership in the Islamic home finance context, I think there's pretty much only Pfida who's in the market. Now folks, let's hear from what Pfida's users have to say. Let's start with a Trustpilot score, which is an average of 3.8, which is okay, but a bit meh. 82% of the reviews are 5-star, with reviewers highlighting their appreciation of the product, how confident they felt about the halalness of the whole experience, how deeply and sincerely the leadership team and the customer service were and they came across, which I think is great. On the other side, there is a lot of feedback on things that could be improved, namely slow customer service with no phone number to call, the process being slow, causing people to miss out on buying the houses they wanted, rigid criteria, stamp duty, a problem we covered earlier, and we also asked our own readers through our newsletter as we've been doing some of these reviews, and we got 17 responses which echo the Trustpilot reviews as well, pretty much exactly. Again, most of our readers were pretty happy with the product, but they also gave the same feedback on improving response times and the problem in the process causing house purchases to fall through. As we mentioned clearly, Pfida have got a lot of goodwill, and this shows in the response to how disappointed would you be if Pfida ceased to exist. This is called the product market fit question. Now what you want to have is at least 40%, that's the magic number, saying that they would be very, very disappointed. That means that you have something that's really of value here. And Any number less than 40% should be pretty concerning for any business. And the good news is that Pfida scored around 60%, so they're clearly onto something. And Pfida is a very young company, and with any business at this stage, there are obviously going to be teething issues. I can read some of these feedbacks, and I can remember back to our time, and frankly, even currently, where any growing business has to deal with these issues. So the good news is there's a lot of feedback to address, and clearly they've got a lot of goodwill from the community, which is a brilliant base to work on as long as they continue addressing some of the quibbles that people have with them. Look, Pfida have clearly innovated, and innovation is brilliant to see, especially in this space. Obviously, customers want something like this. They have clearly said that in the surveys. But for me, the challenges for Pfida now are they need to build this into a scalable platform. That is what the customer needs. And the way that you do that, in my humble view, in the current economic setup and country that we live in, is through regulation. And the question of whether or not they are going to be able to serve just a few hundred people over several years or thousands of people and actually materially address the problem of home ownership is a question, I think, of whether or not they can figure out how to get regulated. I think the next 2 or 3 years will be that critical period, God willing, when we see Pfida really bolstering up and being able to deliver on the promise that their product has. And I genuinely wish them the very best, because I think they are one of the few innovators in our community. I'd love to hear your thoughts in the comments below, and please do share this video with those you know are potentially looking at buying a house in the near future. Until next time, Assalamu alaikum.